Here we go. I'll count us in. All right. 1, 2, 3. Hey, everybody. My name is Dillon. I have a very special guest with me today, Sajid Rahman. Sajid is the general partner of MyAsiaVC, or venture capital firm. And so, Sajid, the past technology really in the last couple months or years, I think AI, robotics, space economy, augmented reality, we're starting to hit this new phase. So today we wanted to get together with you, kind of dig in, talk a little bit about your funds. I'm sure you're probably playing in some of these spaces, right? And also get a little bit of a perspective on kind of the venture capital asset class, specifically in kind of this later stage or kind of secondary market. So, but before we kind of jump into all that, please, how about could you introduce yourself quickly to the audience here?
Oh, thanks, Aaron. It's a pleasure to be here. So my background has been in financial service banking. I'm based in Indonesia, in Jakarta. But like we were discussing before we had started this podcast, is I do a lot of deals in US, and people think I'm actually based in US, but I'm based in Jakarta. I was a banker, and that took me all over the world. So I spent times in Middle East, in Africa, in different countries in Asia. Last was in Indonesia, where I'm based. But I left banking and set up a healthcare business, which currently serves 5 million people. So it really scaled. After that, I also dribbled into renewable energy and built a large-scale renewable energy power plants of roughly 300 megawatt of different natures, in renewable energy side. So while doing all this, I thought, okay, I have always an interest in technology. So I wanted to start investing. Initially, my own fund. So I started investing on my own. During COVID time, so it's roughly 4 years back, everyone was stuck in their room, office, and don't know what to do. So I thought, okay, let me, start investing other people's fund because, a few people were reaching out to me. And that's how it all started. So I started investing initially through syndicates, which I raised from different people, and we're writing checks, mostly early stage. And then, of course, that graduated to funds. There are different funds. One focuses on Web3 infrastructure. One focuses on early stage VC companies. Other focus on late stage deals, etc.
Okay, got it. That's really interesting. Congratulations on all the success. That sounds just absolutely amazing. So, are you still running the businesses, the kind of renewable energy and the healthcare businesses, as well as the venture capital?
Yeah. So the renewable energy running in the business, that means I'm in the board. So we create what we call a holding company, which is a group of people who runs different projects under the holding company. Also for the healthcare, again, I'm not involved into day-to-day basis. That's different. And there are a couple of other businesses where I don't run it. One is a digital bank. One is a electric vehicle swap station, etc., etc. So and all the stuff. So there are different things on the side.
A proper entrepreneur. I love that. That's great. That's really special. Well, congratulations on this. It just absolutely sounds fascinating. So perhaps we could dig into the kind of like the venture capital piece of your efforts. So tell us about your funds, and maybe you could start with your investment strategy. Just kind of how do you approach the secondary market, particularly, right? And how do you think about investments in that space?
So, when I started investing, it was early stage of COVID when I started investing other people's fund, not my own fund. And the reason I called my, the fund or the entity name MyAsiaVC, and the whole idea at that time, I don't know whether you recall, in the early stage of COVID, there was this whole discussion of third order impact. So what is the initial impact of COVID? What is the second order impact? And what is the long-term third order impact? So when I was setting up the fund and the syndicate, I was initially thinking of the third order impact of all the big changes that is happening globally, right? So that, of course, includes the artificial intelligence, the development in chips, the robotics, biotech. So what are the impacts of these technological development on second or third order, and how to capture those values? So that was the whole idea of when I started this, this investment journey. Initially, I started this whole thing at a very early stage, so it's a seed stage, pre-seed, seed stage, Series A sort of deals. Somewhere down the line, I accidentally started doing secondary. The reason I say accidentally is one of the companies I invested in, the founder wanted to sell his equity, some of his shares. And he was asking me, will you be able to do some secondaries for me? I said, okay, let me try.
Opportunistic. I got it.
And
I like that.
that's how, I know there's a bit of trend recently that a lot of people are going to secondaries and trying to, do a lot of deals. And there's a lot of excitement around that space. And we'll cover that a bit later.
Yeah.
But I started doing secondaries probably, half a year before that. So I was already doing secondaries of that individual deal. And then I started doing other secondaries. And then I see this whole, floodgate opened on secondaries market,
right?
With a lot of companies coming out. Yeah.
So as with most, I think, business concepts, that's always the best way to get started, right? It's literally you get demand pull into the space. That's great. So when you're spending your time now, are you still doing the syndicate, or are you just focusing on the funds? Like, how do you kind of spend your time now in your venture capital efforts?
I do both. So I do syndicates as well as funds. Yeah.
So how do you decide? Yeah, go ahead, please.
So the difference between syndicate and funds is that, so there are people who still wants to go on individual deal level and doesn't want to go on a blind fund where they put in money and they don't know which deals.
Totally understand.
So for those group of people, syndicate still, resonates a lot. So for example,
so it's like a co-invest. Yeah. Is that fair, Sajid? Like you have your primary fund and then perhaps you co-invest with from the syndicate on a particular deal.
In some cases, co-invest. In some cases, it's either fund or syndicate only.
Got it. Okay.
So what happens is, for example, let's say a deal, like SpaceX. We have done 3 secondaries on SpaceX. And, there are a group of people who really love SpaceX, right? They want to get as many times as possible into SpaceX. So, if I go and tell them that, okay, will you be interested to invest in a fund, which will do SpaceX as well as 10 other deals? They say, no, only SpaceX.
Yes.
So syndicate makes sense for them.
Yeah, no, it's just, listen, for what it's worth, I do similar type things here in New York, right? And I find it's the same. I work with a lot of financial advisors, and the folks have really strong passions about like a particular company and want to get exposure to that company. Whereas a fund, I think at least some investors, I think, are less excited about the fund. So that's very smart. So how do you operationalize all that? Do you have like great partners, like like fund administrator? Like how do you actually make that all happen? Because that's a lot of work running these funds and also running the syndicate, right?
So I use a platform called AngelList at the back end. So they essentially takes care of the fund administrator, et cetera, et cetera.
That's great. That's great.
In terms of funds, I have partners for different funds with people with different expertise, because fund has a very specific thesis, like Web3 has a specific partner. Others. Syndicate essentially I run on my own because it's essentially I can vet the deal and write the memo, etc.
That's great. Okay, so then when you're doing the deals out of the syndicate or the fund, how do you source those deals? Is it still, do you have relationships with the founders? Are you doing buying in the secondary market now? Like how do you go about finding companies that fit that investment thesis that you told us about earlier?
So secondary is a very interesting one. So if I'm doing primary, that's very different of sourcing deals because you have to reach out or the funders reach out, et cetera, et cetera. Right, in case of secondaries, I'm seeing a mix of either, sometimes there are, individual sellers or individual, early employees or early investors who is reaching out. Or sometimes, I am investing in another fund, which is investing on a larger pool. So sometimes I'm going into a fund of funds. The third one is sometimes I'm getting, directly other investors who are trying to offload. So, we are seeing cases where an investor who is an early investor in a company, we all know the name of the company. I can't say it publicly, but anyway, so the investor wants to offload some of their shares and was asking me, do you want to buy into that fund? So, so they get some liquidity.
So I'm curious with the timing on this, because when I stepped into this space, the timing of when you get access to shares to when you actually have to deliver cash back is not a big window, right? So how do you manage that, right? Because it sounds like you're sourcing the shares first and then perhaps going to your investors or syndicate saying, hey, who would like to invest? Like that might only be like a couple of days time. So, I mean, is that your experience? And if it is, like, how do you manage that? That's a lot of work to do in a short period of time.
Oh yeah. That's whenever. So that's what I have to manage LP expectations, because in case of primary, so there are a couple of very fundamental differences, right? So in case of primary, the terms are set, exactly what you're getting, the shares. In case of secondary, it's a very individual negotiation, right? So, so probably you close a secondary deal at X price, the next day someone else is selling at X minus 1. So,
Right.
so that creates some confusion unless it's a tender from the company. So
Of
that's one
course. Yeah.
problem.
Of course. Yep.
The second problem, of course, is like you're saying, in some cases the deals move really fast, and that's where you have to essentially go back to LPs and say, okay, we need to close it in 3 days or 5 days or 7 days. Some cases, yeah,
Yes.
we do have time. So yeah, so secondaries are usually very fast moving compared to primary
Yeah,
in many
that's
cases.
and that to
Yeah.
me, I find it such a unique challenge. Do you find that your LPs are like receptible to that? Do they move that quick, or maybe you've trained them that way, right? They're used to it now with you because of the relationship you have with them.
Yeah, I mean, few are. I
Okay,
mean, there are LPs who find that timeline is too pressured, and so they usually don't want to participate in those cases. Or so when it comes for me to really sign the docs and send the wire, I just have to cut off some of the LP contribution because the funds don't come in,
understood.
etc.
That's
But
really
yeah.
fascinating.
Mm-hmm.
That's really fascinating. Okay, so then I'm curious. Then where you're in Jakarta, right? So then are a lot of your LPs in Asia, or are they in the United States or Europe? Like, how do you source the capital, the syndicate? Like, what is it made of? Where are the folks made
So
kind of coming from?
roughly 65% in US,
Okay.
and the
Okay.
rest
Cool.
35% is rest of the world. So of the remaining 35%, I would say 20% Asia and the remaining 15%
So
Europe.
you're like working
Latin.
24 hours a day. Is that fair? Come on, man.
And so
That's a lot.
almost 7 days, right? Because
That's a
when
lot.
in Asia slaves, US Opens and all those stuff, right? So yeah.
I respect that. That's very. I respect that. That's a lot of hard work. So and then on the company side, so then that's very interesting. So
Hmm.
are you looking at? I mean, if 65% of the LP base is in the U.S., and are you looking at U.S. companies, or like perhaps maybe a better question is, are your LPs in Asia interested in different companies than your LPs in the United States, or is everyone kind of looking for the same companies regardless of where they are in the world?
So I think what's happening in the secondary market is people are, because it's not a bet. In most of the cases, secondaries are happening at very late stage, right? It's almost like
Mm-hmm.
pre-IPO or at least Series D plus or later, right?
Right. Right. Right.
So the company is already well known. The brand is well established. So, so if it is a SpaceX or OpenAI or, some Anthropic deal, some of these deals, everyone knows the name, whether the
Yes.
LP is based in Asia or US, and they want to get into those companies. So those big names, they work similarly across geographies.
Yes.
And then what I'm seeing, there are geography specific companies. So there
Mm,
might be a very large company in Asia, which is not very well known outside Asia. And the Asian
sure.
LPs want to get into that deal.
Got
Similar
it.
in Latin America, or, maybe not so much true for US because most of the US large companies are well known. But in other
Yes.
parts of the world, you have some large regional companies which are quite attractive.
Okay, so I might be over my skis here, but like an example of that, there's a company in Asia called Grab. Am I
Yeah,
remembering this right?
yeah.
Okay, so but that's a brand for that in that instance. Maybe you could just maybe give like 20
Mm,
seconds on just Grab
mm,
who they
mm.
are, because I'm way over my skis on this. But that I don't believe they're in the United States, right? But they're a
Yeah.
huge company in Asia. So probably everybody's using them. All your Asia LPs are using them, right? But they're not here
Mm.
in the United States. So your US LPs wouldn't maybe be as familiar.
Yeah, so for example, Grab is essentially the Uber for Southeast Asia, right? So it's a similar concept. It at one point it went, I think it was valued up to 20 billion or so.
Oh wow, that's
So
great. Big
so
company.
Grab is, yeah, it's a very large company, and then so anyone in this part of Asia would know Grab and would like to get
Hmm.
into. Before they obviously went public, but before that, the similar, in Latin America, you will have some companies like Nubank and others, which are large local companies, and then there are some payment companies which are specific to Asia, which is quite well known, but people in the US would hardly know about them. And these are large companies. These are all
Yeah.
billion-dollar companies, more than billion-dollar, three, four,
Yeah,
$5 billion companies.
that's like a
Yeah.
fascinating space. Like I mentioned earlier, like I had this ETF company I started that we were invested into companies in mainland China, and like these are to your point around Grab, it's like the Uber of Asia. I mean, there's similar type companies
Yeah.
all over the world that have business models that are very familiar to like a U.S. company that people in the United States would be familiar with.
I
So
mean,
it's same
yeah,
value proposition, right? And why would
yeah,
folks in Asia not like Uber, right? I mean, it's obvious. I mean, that's going to be a very successful investment, I would think, right?
yeah.
To kind of replicate that business model.
For my early stage or the primary deals, my theory is always that all countries are on the same digitization curve, but at different points. And
Smart. That's
And,
smart.
essentially you see Amazon's of Asia. You see, any big company you name US, there's a version of it happening in Asia or
Very
Latin
smart.
America. So
Yes,
essentially, the model works. It's a more a question of whether there can be enough right people on the ground and there ever enough regulatory support to make those models successful. So you're not taking
I
so
got
much
it.
of a model risk. Yeah. So those are very
That's
interesting.
very smart. That's very smart. Okay, all right. So listen, the pace of technology is really changing fast here. Over, I think this just recently, and probably over the next 10 to 15 years, it's going to really start to accelerate, and the world's going to look a lot different. Like if I look back to 2008 when the iPhone just came out, right, to where we are today. There's some new companies that never even existed before, and now they're apps on an Apple iPhone. App Store didn't exist before 2008, right? So as you're looking ahead 10 to 15 years, and that's like I think a standard investment horizon for a lot of folks, 10 years. Are there any emerging technologies or trends that you're kind of seeing that you're interested in? And then subsequently, are there any companies that you think could be interesting to look at and that kind of sit in the middle of those trends?
Oh, definitely. I mean, so, when I do the primary deal, I'm relatively open. So I do, I try to understand the trend and build on those as well as the successful model like the Ubers of Asia or the Stripe of Asia, et cetera, right? So,
Mm-hmm.
but then in case of secondary, I always try to understand the next wave because those are the see what happened, and I think that's where there's a lot of interest on secondaries now because some of these companies have really gone very big. Many
Right,
investors have not been able to take part in their early stage of investments,
right,
etc. But they now want a be a part of that company because they still believe the company has a long runway, can give a significant return, right? So one obvious trend that we all know is artificial intelligence. So it is now
right.
like any secondaries on AI is now going through the roof. I mean, there's a huge
Yes.
interest. Similar with space companies, with obviously we're seeing SpaceX, but then relativity space and others. So that's the second one. The
Okay.
third one I'm seeing is defense. So defense is a relatively new. So Andrew Rayl started it, but then we're seeing quite a few, defense tech companies that are coming in. And then in general, of course, anything which is artificial intelligence adjacent, like Databricks and others, which are sort of, or Cohere. So companies like
Like
that,
a
which are building
picks
some
and
of the
shovels.
infrastructure in that space.
Right.
Yeah.
Yeah.
So.
Got it. That's very interesting. So do you find, I mean, some of the companies, especially in AI, the market is like very challenging or expensive, right? So how does that come into play when you're thinking specifically in the secondary? Is something just you look at a company and be like, man, I'd love to buy OpenAI, but it's just it's like so competitive and so expensive. Like I just don't think right now is a good entry point. Do you have those in your investment thesis or kind of or maybe said another way, it hits the mark on the investment thesis, the company, right? And it fits the theme that you want, but just accessing the stock is too expensive, right? It's too much of a premium. Do you ever think about that or if if you come across it, is that something that you consider when you think about, hey, I'm going to set up a fund or do a syndicate deal on this particular company?
Oh, definitely. Yeah, I think so. There are a couple of things that are happening in the secondary space. One is, in general, there is a significant discount, except for AI companies. In most
Yeah.
of the large companies, there has been, I have done secondaries for Stripe, which was, at a significant discount compared to their raise, right? So,
Yes.
so there have been a significant discounts happening in many of the companies to the extent I did not invest, but there were one company which was doing at 99% discount, right? So, so essentially you can, in front of your eyes, you have seen this company going from starting to $5-10 billion valuation in a span of 2-3 years.
Yeah.
And then again, you're seeing that it's coming down almost 97-98%, right? So all those
Yes.
things are, we are seeing this in a very short period of time, this ups and downs. So of course, yeah.
Yes.
So the price is always an important. In case of AI, it is sometimes difficult because the market is so big. It is sometimes difficult to understand whether we have reached the maximum point or not. But what I think will
Okay.
ultimately end up happening in artificial intelligence, that couple of big names will get so much funding that they will be significantly ahead of others. So the question is,
Mm.
they will probably be the next Google or next Facebook or, you
I
know,
I agree with
at that
that.
level,
I
right?
agree
So
with
then the
that.
question is that,
Yeah.
then at that point, our strategy is more to get into the ship rather than
I understand.
what the
Okay,
valuation is.
let me ask you this. Let me ask you this question too, Sajid. So I have a lot of conversation with like chief investment officers at wealth management firms here in the United States, where there's this idea of like these companies staying private for longer, which is, I actually think, one of the primary reasons why the secondary market has kind of taken off so much. Because I mean, you go back like 10 years ago, 15 years ago, all of these companies would have been public at like unicorn status. I mean, like there's so many unicorns now, it's wild, right? But they would have like hit unicorn, they would have gone public. They'd be in like the Russell 2000 small cap stocks. Or wherever they are in the world, right? Small cap, then like mid cap, and then they eventually move into like the S&P 500 or whatever's appropriate for their geographic region. But like that's not happening now. They're staying private all through the small cap, all through the mid cap, and then you got like a SpaceX who's at 180 billion, or like an OpenAI. It's like a 5-year-old company. It's already at $100 billion valuation. So is that are you seeing some LPs that would have normally been just public market investors only, and now because this? Or do you think that that this trend is going to continue? Maybe is a better answer. And if it is, do you think more LPs will come in that maybe haven't really been in venture capital before, but they're seeing that these opportunities are staying private, so they have to go where the opportunity is?
I think to your first question and to your second question, I think both are yes. So I'm, some of my deals, I'm seeing quite a large checks coming in for secondaries, and those LPs are essentially probably would have bought it into the public market if they're available. So because it's not, they are, coming in at this stage just to get in. And those are pretty large checks. In terms of second one, I mean, I think this trend will continue at least for a while. I know there is a pressure from early investors to take some of these companies, public as soon as possible, but then there will always be a pressure to remain private. In fact, probably SpaceX is the best example, right? So, they have kept private for so long that nowadays, I think what's happening regularly is a tender offer. And I think what a lot of companies have started doing, because they're keeping private so long, they're offering early investor and exit through regular tender offers. And that, I think, will become more of a practice going forward.
So talk about that tender offer, because that is such an interesting dynamic. Because I'm seeing SpaceX do tender offers. Canva just did a tender offer. Stripe did kind of a tender offer like a year and a half ago, right? But OpenAI looks like they're going to start doing tender offers like every 6 months. So I mean, perhaps like, do you think that these tender offers, like what SpaceX is doing, where they do one like every 6 months, do you think that's going to be the norm? Do you think that'd be the norm going forward for some of these larger companies that want to stay private for a couple more years?
I think it's a question of the capital requirement of those companies. Because, I mean, one is, of course, the tender offer can give some early liquidity, but they also need to continuously raise, right? So, got it. So that, unless that puzzle is solved, they need to, continue to, they have to go to public.
Let me ask though, do you think with the SpaceX tender in particular, do you think that that's because the company needs capital, or they're trying to create liquidity for investors and employees, maybe both?
I would say mostly to create liquidity. I mean, of course, SpaceX needs capital, but I think, because if they needed, let's say, a large round for a company of SpaceX's, the tender offer would probably not given them that level of funding. A tender offer is mostly, where you're buying existing shares. So it's not actually going to a capital, injections for the growth.
Yes.
Right? So,
that to me, I think is, it gives me a lot of excitement, because that's like to me, I think that's a function of a maturing secondary market, right? When it's company driven liquidity. It's really good price discovery, right? You're not getting your face ripped off on a trade if it's a tender offer and there's $750 million worth of shares trading hands, like in a SpaceX case, right? So that's really interesting. Okay, maybe one last final question. Like, what are your thoughts on, at like kind of Apple Vision Pro and augmented reality, right? Like, or do you have any strong opinions about that particular topic? I mean, there's some AI that obviously goes into that, but it's this new medium, right? I think, we had like the internet, right? In 2000, we had the iPhone and kind of mobile that kind of took that on a different path. Obviously everyone's walking around with a camera and a video recorder in their pocket that open up interesting opportunities. Now we have this like new device, right? Do you have strong opinions? Do you think this is kind of like a next like internet? It's another kind of platform that's going to launch us into a whole kind of different segment of reality? Do you like it? Do you not like it? Is there interesting investment opportunities kind of in this augmented reality space?
I personally used Oculus a few times. I really didn't like it that much. My son really loves it, but I didn't find it very user friendly, at least for a long usage. I haven't tested the Vision Pro yet, but I was in US 2 weeks back, and I walked into one of these Apple store, and there was like a long queue. But what I hear about Vision Pro, apparently Apple has somewhat solved it to an extent that a person can use it for a longer time without much of headache or other problems. Whether it's going to be the next iPhone or not, I think it's something to be seen. Because there is always this question of the Vision Pro, where you're essentially you're watching something, but also at the same time you are aware of your surrounding, and sort of like you're part of the reality, as well as you're almost like an iPhone, you're using something. Question is that can you do it at a larger scale and constantly for over, like the way we use iPhone or any other phone, right? We use probably 7, 8, 9 hours on it. So I don't know whether it can replace that or not. Probably an early stage, but it's a medium which can be very powerful if it works. At early stage. I haven't done an investment in this space. I mean, I did some primary investment into early stage, companies which are building apps for, VR companies and etc., but not any large secondary deals. Not yet.
Yeah, I mean, there certainly aren't, at least not that I'm aware of, apps that are built specifically for Vision Pro. So I think you're right. That's a smart assessment. Like, wait and see what the developers do and kind of what they bring to market. It's a fascinating space. Like, I don't know if, to your point, I don't know if it's going to replace an iPhone, but I could see it being like an iPad type scenario. Right, where like businesses are using it, and there's other kind of like use cases or applications that are. I don't have one, but I got to tell you, I have similar thoughts to you that you have, right? But I'm also fascinated by AI kind of coming in and playing a role in that too. Like my thing, I think, where I would get really excited about it is if they did something interesting with FaceTime, where it was not like some kind of odd looking photorealistic avatar, but it was like an actual human body in the room where I'm at, and the AI is making their arm movements and facial expressions look as if they're in the room with me. I mean, like these things I'm sure are coming at some point, right? And that to me is interesting. So I have like a family and young kids. If I don't have to get, like, you're in Jakarta, right? So coming to the United States is quite a thing. That's a long flight. You're away from your family. Like, if you could just throw on an Apple Vision Pro and, we're like in the same room together, that's pretty interesting,
The big one would be education, right? So, I mean, if you can, smart. If you can really disrupt the whole college, education, and, make it accessible to people anywhere in the world. Let's say, a Harvard school classroom can be replicated to sitting someone in Jakarta or anywhere in the world.
That's right. I think
quite important.
I think that's very smart. Okay, so Sajid, thank you for this. Let's stop here. But if folks want to invest with you, or they want to find out more about your fund, or talk to you directly, how would they do that? Well, what's the best way for folks to get in touch with you?
So my Twitter is at Sajid Republic, so they can find me at Sajid Republic, or I'm available in LinkedIn, or they can go to www.sajidrahman.com. or www.myasiavc.com. Yeah.
Smart. You make it easy for people to get it. All right. I got you. That's great. Well, it was an absolute pleasure to speak with you. Thank you for your time. And hopefully we can stay in touch and do this again sometime soon.
Definitely. Thanks, Aaron. It was a pleasure.
Okay.
Thank you.
Thanks, Sajid. Appreciate you. Okay. Bye-bye.